Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQ and I'll talk about the general trade setup. So let's first look at the SGX Nifty. Asia as a region is trading extremely weak, and that is reflected on the SGX Nifty. It's down almost 53 points at this point of time. So expect a weak opening for our markets. Now, how did the ADRs pan out in trade? Tata Motors ended down almost 2%. The numbers came in during market hours, but the conference call was after market hours. So this reaction is there post the conference call. So not too much of a positive number. Vedanta fell in almost 1.1% given the fact that there is extreme weakness among base metals. ICICI Bank ADR had gained almost 1.1% in trade. Let's take a look at how crude is panning out. Despite it's trading muted in early morning trade after a 0.6% move overnight, and really surprised that post the Saudi-Lebanon standoff that's happened, crude hasn't reacted that much. For base metals, very weak closing for the base metals on the LME, especially nickel, which was down almost 3% in close by LME. The other base metals, aluminium, copper and zinc, were down anywhere between 0.5% to 1%. COMEX copper has opened with a positive bias currently, but if you're looking at Shanghai, steel is trading down 1%, rubber is trading down almost 0.4%. The other base metals are also trading muted. In fact, nickel is down almost 3% even in China currently. Now, as far as gold is concerned, gold is benefiting because of the weakness in other metals. Gold has gained for the third straight session, so that is something that you have to watch out for. Fund flows, FI sold in almost 714 crores in the cash market. This is the provisional number. DIs have bought in almost 231 crores. Now, look at the FI buy figure for the month. They bought in almost 10,400 crores in the month itself, given the fact, and this includes all the bulk deals that came in, because the NSDL number that came out yesterday for the day before was 5,000 crore of net buying. DI sold in almost 132 crores in the cash market. Overall, what we saw yesterday was that the broader markets did manage to outperform the benchmarks. They did extremely well. The India VIX came down by almost 2%, and pharma as a sector was seeing significant amount of weakness. So Nifty Pharma was down almost 0.6%. As far as Nifty, it ended absolutely flat. What contributed? Reliance, ICICI Bank, SBI will come out with numbers, and a big block deal in Indiabulls Housing Finance, post which it moved. But weakness is seen in ITC, HDFC as well as Kotak. But what's the FNOQ like? What kind of writing are we seeing currently?
Well, Darshan, as you can see, that the Nifty closed flat in today's day of trade, and based on that, we have seen very little change when it comes to the open interest in futures. In fact, just about 0.2% increase. It's the same for the Bank Nifty as well. While the index itself has moved up 0.4%, there has been a very, very little change when it comes to the OI again. Considering that, we have seen the India Volatility Index come off to a certain extent, still above the mark of 13, but down as much as 2.5%. And moving in predictably, the PCR hasn't changed either, still at around 1.35 as against 1.36 the day before. But in terms of changes in open interest, we are looking at very little activity around the mark of 10,400. As you can see, a little more writing coming along in the 10,200 put. But as far as the stocks are concerned, Gen Irrigation moves into the band. We're also watching out for several other counters, such as Page Industries, which has seen a substantial amount of accumulation towards longs. And we're also keeping an eye on Pidilite, which has seen short covering, considering we have seen unwinding of nearly 19% in Pidilite. So we'll be watching out for these, but it will be another big day for earnings, and we will have a lot of movements, especially in the futures and options space on the back of earnings.
Stock of the day is V-Mart Retail. Good set of numbers reported by the company. Now, if you look at the revenues, they've gone up by 24% in this quarter at a figure of around 242 crore as compared to 196 crore that we saw in the base quarter. Net profit, for that matter, the company has reported a net profit of 2.7 crore as compared to a loss figure of 0.7 crore that we saw in the corresponding quarter of the previous year. Look at the EBITDA margin, or the operational performance of the company. EBITDA has risen almost by 3-fold here at 8.6 crore as compared to a figure of nearly 3 odd crore in the corresponding quarter. Now, margins for that matter have too expanded. They've almost doubled up to 3.6% as compared to 1.5% that we've seen in the September quarter of the previous year. Now, what goes behind the making of this good set of numbers? Well, higher sales along with your operational efficiencies are at play. If you look at the bottom line performance, the company has reported net profit. Now, higher other income combined with your lower finance costs has also aided the bottom line performance of the company. If we were supposed to look at what goes behind the top line numbers of the company. Well, in that case, that's the making of the numbers that we could see. Next in the chart, we have the pie where we have the breakup in terms of how the fashion segment has performed and contributed to the overall sales, which is 93%, and Kirana, for that matter, is 7% of your overall sales. If we graduate next to the sales mix out there, you'd see apparels has already come, has higher contribution this quarter at 79.17% as compared to 76% that we saw in the base quarter. Non-apparel as a percent to your sales mix has comparatively gone low, and Kirana almost remains the same. Now, if we're supposed to talk about what does the company do, well, it's a value retailer based in tier 2 and tier 3 towns, and it offers apparels and general merchandise and Kirana. That's the flavor of what the company does. If you look at the stock performance, it's over 150% of gains for this counter on a yearly basis. On a YTD basis, it's close to 200%. Historically, if you look at the outlook, that's also quite good for the company. Historically, Q3 has always been a strong quarter for the company, and the company looks forward to have this continued trend that we've seen. However, with this, let's toss it over to Jayesh and Saloni for currency and commodity market updates. Guys?
So starting off with rupee first, it ended marginally higher for the second consecutive session yesterday after trading in a narrow range of 64.85 to 65 for most part of the day. The local unit eventually ended 2 paise higher at 64.94 levels against the dollar. Now on the global front, Asian currencies were trading higher on the back of a weaker dollar on the concerns that tax reform policies that were announced by government last week will be delayed for another year. Now coming back home, dollar rupee is trading at 65.16 levels against the dollar in the non-deliverable forward market, which indicates a weak opening for Indian rupee in today's trade. Moving on to bond markets, the 10-year benchmark yield ended 1 basis point lower at 6.93%. And lastly, global funds reduced their rupee debt holding for the 4th consecutive session yesterday. They reduced their debt portfolio by approximately 1,600 crore according to NSDL data. Well, that said, moving on to Jayesh, how is commodities panning out today, Jayesh?
Morning, Saloni. So, oil prices saw some bit of uptick in the overnight session. It was up nearly 0.7%, both for WTI and Brent. WTI is trading near the 57 mark, and Brent is trading just below that 64 mark. Now, we understand that, the Saudi crackdown has brought about some bit of instability in the region. Now, Saudi Arabia also plans to cut the exports to all the regions that it supplies to going into next month. And a clear view has come out with a note in which they believe that the Saudi Arabia and Russia alliance may need to last through 2018 for the supply cuts that they are aiming for. Moving on to base metals, we saw some bit of negative bias come about for all of the base metals. The index itself ended lower for the day. Nickel was the standout performer, which lost more than 3%, followed by copper, which actually trades at a 4-week low now after we saw some bit of weaker China imports come about for that one. Moving on to the precious metal space, spot gold has found its feet near the 1285 1290 region, and it is also up 1.5% for the week and on track to snap a 3-week losing streak.
All right, as far as the stocks that we're tracking is concerned, at the top of the list is Axis Bank, where they have a board meeting today to decide on raising of funds. Now remember, newspaper reports have been suggesting that Bain Capital along with 2 other investors are interested in buying some stake in the lender, so that news could keep the stock active. That apart, we're also tracking Just Dial, where according to a Business Standard report, Google is in talks to acquire Just Dial's business. In fact, they had been ongoing talks for a while apparently, but now they seem to have entered into an exclusivity talk. So that's another counter to focus on. We're also tracking Alok Industries on the back of an ET report which suggests that Reliance Industries could be interested in buying certain divisions of the company, specifically the polyester yarn unit. So keep an eye out for that name as well. And lastly, on the back of a bulk deal, we're tracking Doubles Housing Finance, where BNP Paribas Arbitrage has bought about 0.7% stake yesterday. So these are some of the names to watch out for.
Okay, the big number that came out after market hours from the pharma space was Aurobindo Pharma. The headline numbers could look good. They were strong. They came in much ahead of what we had anticipated. So the top line revenues coming in at 4436 crores versus our estimate of 4113 crores. Profit coming in at 781 crores. That's a big beat of close to 100 crores. EBITDA also, you know, our estimate was 1060 crores. They've come in at almost 1100 crores. Margins were in line with what we had anticipated, and that was account of other expenses which were up almost 160 crores. Now formulations and was up almost 22% on a Y-on-Y basis and even on a Q-on-Q basis. The API revenues were flat on a Y-on-Y basis. US revenues were up almost 21%, but this was on account of 2 months exclusivity of the Renvela. How this will pan out, we'll need to ask the management in the con call. Europe was up 37%. That was led by the full quarter integration of generis pharmaceuticals, and the other AVR market was down 25%. Now the devil is in the detail, because what if you go down, what has happened is that you find out that there's higher working capital that has been required, and because of that debt has gone up significantly. The gross margins have improved, and that was on account of Renvela. Whether this will continue or no, we need to ask the management. Tax rate was much lower. It was at 20% versus the annualized normal 27% rate that was there. And R&D expenses were surprisingly very low at 3.6% of the total sales versus the street anticipation or the regular close to 5%. So that is something that there's a lot of changes in the internals which have got up to these numbers. So there's a management conference call at 8:30 in which most of these queries will be answered.
BPCL will be coming out with this number today, and on a standalone basis, it is expected to be a strong quarter for the oil marketing company. Now, though revenue would be marginally higher to 58,000 crore, net profit would rise by around 225% to 2,400 crore. EBITDA would also rise by 178% to 3,400 crore, while margins would expand by 400 basis points to 6%. Now, gross refining margin, that is the key number for an oil marketing company, would come in at $9.3 per barrel versus $4.9 per barrel in the last quarter. Now, sequentially, this is expected to be a strong quarter on the back of high refining margins, a strong volume growth, and and inventory gains. Now, this quarter, the company is expected to come out with an inventory gain versus an inventory loss of more than 700 crores in the first quarter of financial year 2018. Now, crude throughput is expected to be in the range of 6.2 to 6.7 million metric tons in the second quarter. Now, refining would be good, but marketing performance would take a hit on the back of the digital discounts that the company had given, and because of GST. Now, Kochi benefits of most of the Kochi plant ramping up would come in the second half of the financial year 2018. So, stabilization of the Kochi plant would be a key monitorable along with the outlook on gross refining margin.
For Mahindra and Mahindra as well as the MVML entity, we are expecting good growth coming in because in the second quarter we saw good tractor sales, and overall we had a healthy second quarter for the automakers. If you look at the sales, we are expecting a 21% jump for the M&M plus MVML entity. As far as profits are concerned, because of lower other income and higher tax rate, we could see a single-digit profit growth, and profit is expected to be close to 1,300 crores. Margins seen expanding by nearly 150 basis points to come in at a level of 13.1%. Of course, this time the key monitorable will be the management commentary on the rural demand, especially for tractors and the utility vehicle segment. Of course, UVs didn't do that great in the first half compared to the other passenger vehicle segments, but in the second half most of the analysts expect a good volume recovery for the automotive or the UV business for Mahindra and Mahindra. Also, this time we could see some surprise on the margin front, because in general we have seen higher tractor sales would mean better realizations for a company like Mahindra and Mahindra. So this is something that we'll be watching out for as far as second quarter M&M earnings are concerned.
Well, this is going to be the second quarter that SBI is going to be reporting numbers as a merged entity. So the focus will continue to remain on consolidation of the associate banks and the balance sheet cleanup. Also, the numbers will not be comparable on a year-on-year basis. So sequentially, analysts are expecting the net interest income to grow by about 6% and net profit to come in about 38% higher at 2,759 crores. A large jump in the net profit could mainly be on account of the capital capital gains that are expected to come in from the 8% stake sale in its subsidiary SBI Life Insurance during the quarter. When it comes to the net interest margins, they're expected to improve on a sequential basis, partly led by the recent capital issuance and also the savings account rate cut. But broadly, the pace of provisioning is expected to remain higher for the bank. Loan growth is expected to remain weak. Stress addition is also expected to remain elevated. However, we could see some moderation from the Q1 levels like we have seen for most of the banks. More important is going to be to see if recoveries or upgrades come in from last quarter's NPA, especially with respect to the retail and some of the agri accounts which had seen a big spike. So broadly, we are watching out for any comments with respect to the associate banks integration, the trends and guidance with respect to the asset quality movement, the watch list and the resolutions progress, and also the provisioning requirement for accounts in RBI's list. Two key numbers that the streets will be watching are going to be the slippages and the corporate watch list number. Now, at the end of June quarter, the slippages number stood at about 26,000 crores. Analysts have broadly factored in a number of 20,000 crores or so for the quarter. So any number beyond 20,000 could probably be taken as a negative for the street. But broadly, it's expected to be stable, steady quarter in line with the trends seen in June.
Mahindra Logistics will be listing on the exchanges. Now, the company had raised close to 829 crore rupees at the issue price of 429. The issue was subscribed close to 8 times, with most of the demand coming in from the QIB portion. QIB was subscribed 15.6 times, while HNI 2 times and retail 6.1 times. Now, the street is expecting a premium of around 20 rupees per share, which indicates a listing gain of just 5%. So let's see how the valuation would stack up on listing. At a share price of 450, the market capitalization would cross 3,200 crore rupees, while price to earnings would be 70 times, price to book 9.2 times, and market capitalization to sales around 1.2 times. Now, at a share price of 460, the market capitalization would be close to 3,270 crore rupees, price to earnings would be 72 times, price to book 9.4 times, and market capitalization to sales 1.22 times. Now, if you see, Mahindra Logistics is one of the largest third-party logistics solution company which follows an asset-light business model. Now, asset-light business model means that most of the assets used for operations of the company are not owned and are taken on lease. Now, if you see the business of the company, it can be broadly categorized and differentiated in 3 different ways. First is the segment-wise, second is client-wise, and third is revenue source-wise. Now, if you see the segment portion, supply chain management contributes around 90% of the revenue, and the revenue coming from this segment has grown at a compounded annual growth rate of 19% over FY15 to FY17. Now, auto clients contribute most of the revenue to the company, and the revenue portion from auto clients have grown at a compounded annual growth rate of 7%. Now, Mahindra Group contributes around 55% of the group's Mahindra Logistics revenue, but it is the revenue that has from other clients that has grown at a faster rate compared to Mahindra Group companies. If you compare Mahindra Logistics with peers, the revenue and net profit has grown at a compounded annual growth rate of 15% and 17% over FY13 to FY17, which is at a faster rate when compared to its peers like Blue Dart, Gati and TCI Express. But the EBIT margins of the company remain subdued at 2.3% because of the asset-led business model that the company follows. Now, if you see the return ratios of the company, return on equity, return on capital and return on asset remain subdued when compared to Blue Dart and TCI, but it was better when compared to Gati. Now, return on equity was at 13%, capital employed at 16%, and return on asset at 5.6 times. Now, if you see the balance sheet ratios of the company, the book value per share remained at 49 rupees per share, total debt was as low as 53 crore rupees, while debt to equity was as low as 0.2 times. Now, this debt to equity and total debt was better than Blue Dart and Gati, but at par with TCI Express.
Lowering of rates on items that currently fall under the 28% tax category and more relief for small taxpayers are a few things that can be expected from GST Council's 23rd meeting to be held in Guwahati. About 200 odd items that currently fall under the 28% tax slab, 80% of these items are expected to be brought down under the 18% tax slab. Now, as far as relief for small taxpayers is concerned, the GST Council will look at revamping the composition scheme which can be availed by small taxpayers. A group of ministers was constituted to make the composition scheme more attractive and has recommended having a flat GST rate of 0.5% of the taxpayers' turnover. Remember, currently taxpayers who avail the composition scheme, traders, manufacturers and restaurant owners pay a flat GST rate of 1%, 2% and 5% respectively. Other recommendation that the GOM has recommended is that increasing the threshold of availing the composition scheme from 1 crore currently to 1.5 crore. This is something that the GST Council will discuss and decide whether the threshold can be increased so that more taxpayers can avail the composition scheme. Other recommendation made by the group of ministers that the GST Council would consider is lowering of GST rates on restaurants and having a single rate of 12% for both air-conditioned and non-air-conditioned restaurants. We spoke to 3 state finance ministers, and here's what they had to say.
There are a number of intermediate products like building materials which have been put in the highest bracket. I think it is inappropriate they be there, so they should be brought down. But as for the other consumer products, we have to look on the merits.
As far as composition is concerned, we had proposed that if the threshold could be increased from the present crore to 1.5 crores, if interstate sales could be allowed, and so on and so forth. If tax returns could be paid quarterly instead of monthly, if the HS code could be simplified, and so on and so forth. But basically, we need to look at 3 main areas to get the GST system going. One, of course, is the rates. If the rates could be brought down, compliance issues could be sorted out, and the IT backbone, the GSTN, if that could be made more efficient. And I think if we could do all 3, then I think within the next 2-3 months, India could be sailing through.
Composition can be made a little bit more inclusive and easier to comply with as well. So our proposals are related to composition scheme, and I think a group of ministers has already looked into it and they have come up with some suggestions, and I hope we will also push for those.
From the cash market, watch out for Amara Raja battery. The stock was up nearly 7.5% yesterday and saw delivery buying in excess of 80 crores. This was after the company reported a strong quarter. The delivery volume was up 255% at 11 lakh shares versus the 10-day average. The total volume too surged nearly 5 times at about 40 lakh shares versus the 10-day average. Petronet LNG, the stock was up nearly 3% yesterday, saw delivery buying in excess of 180 crores. The delivery volume was up 170% at 70 lakh shares versus the 10-day average, and the total volume too surged nearly 250% at about 1.57 crore shares versus the 10-day average. The last and final stock, ITC, it was down 2% yesterday and saw delivery selling in excess of 400 crores. The delivery volume more than doubled at 1.5 crore shares versus the 10-day average, and the total volume too surged 70% at 2 crore shares versus the 10-day average.
Well, we have 2 brokerage views coming in today. First one is Citi on SBI Life, where they have initiated a buy with a price target of around 800. This means a potential upside of 22% from current market levels. The reason why Citi is so bullish on SBI Life is firstly because of its franchise strengths, which is expected to drive growth, and it's expected to be robust. But SBI Life is also very well positioned to capitalize on the increasing share of financial savings in India. Moving on to this next brokerage, we also have Bank of America Merrill Lynch on Britannia, and this is also an initiation. They have rated a buy for the counter with a price target of 5,500, which also implies an upside of nearly 16% from current market levels. And the reason why Bank of America Merrill Lynch is positive on Britannia is that there is a healthy uptrend expected on an operational level, that is at the EBITDA. They also see that higher profitability and market share gains could support its premium valuations. Do remember that Britannia is a company which caters to the premium segment, which could offer, much better returns when it comes to margins expansion. So that's also one reason why Bank of America Merrill Lynch is positive on Britannia.
Now, there's clearly lots to talk about over the course of the day. Key earnings coming out today and the GST Council meet, but there's also lots that you can find on the website bloombergquint.com. Here are a couple of them. First up, salaries are expected to rise by 10% in India in 2018. That's the highest in the Asia-Pacific region. That's according to the Q3 2017 Salary Budget Planning Report that was released by Willis Towers Watson. The highest projected salary rise is seen in the energy, FMCG and retail sectors. Moving on, the Airports Authority of India may look at issuing bonds to raise funds to develop existing and non-operational airports as the government looks to boost air connectivity in India, which is the third largest aviation market in the world. That was all that you need to know going into trade today. But before we end, just a heads up, we've started WhatsApp notifications. We'll send you only a few messages over the course of the day with only the key news updates. Find a link at the bottom of the homepage, bloombergquint.com. Thanks for tuning in. Up next is Indian Open. This is Bloomberg Quint.